Hi, everyone. I'm Steve Koepp, a co-founder of From Day One, our forum on corporate values, and we're looking forward to today's webinar. But before we introduce today's speakers, I want to share something special we have for today's attendees. One of our monthly virtual conferences is coming up on Wednesday, August 18th, and it's titled Learning from a Crisis About What Working Parents Need. Thanks to our partners and today's sponsor, we have some complimentary VIP tickets available for those who've joined today's webinar. That would be you. I'm putting a link in the chat right now. You'll want to take advantage of this one. The regular price of our conference tickets is $149, and this link will give you a free VIP ticket for the whole day's activities. And now on to today's webinar. In the super competitive labor market of right now, there's been a new focus on benefits that workers need and want. Today, we'll be exploring a particular and timely aspect of that trend. Our title for today's session is, For a Diverse Workforce, Are Your Financial Benefits Fair and Equitable? From saving to borrowing to insurance, financial benefits programs can have a hidden demographic bias. So how can employers make sure that the benefits they offer meet the needs of an increasingly diverse workforce? What innovative programs can they explore to meet the individual and changing needs of their workers? Our sponsor today is Origin. I'll tell you a little bit about them. Origin was founded on the belief that financial planning should be accessible to everyone at every stage of life. Origin is the first comprehensive employee financial wellness platform for the modern workforce. Its integrated solution helps employees manage compensation, benefits, and personal finances in a single place, side by side with financial professionals. Before we get started, a few quick logistical items. This webinar is being recorded and will be available soon on demand after the event, so you can look out for an email in about 24 hours with a link. That email will also have info on how you can get professional development credits for this session from the Society of Human Resource Management. And look out for a written account of this conversation soon on our website at fromdayone.co. At about 45 minutes into the hour, we'll begin a Q&A session. You can submit your questions at any time during the webinar using the Q&A button at the bottom of your screen. Now I'd like to introduce our moderator, Emily McCrary-Ruiz-Esparza, an independent writer and editor who writes about workplace culture, diversity, equity, and inclusion, and hiring. Her work has appeared in Fast Company and In Her Sight, the career resource for women, among other places, and has been syndicated by MSN and The Motley Fool. Okay, with that introduction, Emily, over to you.
Thank you, Steve, and thank you to all of our panelists who are here today and those joining us on this call. I think this is a really, really important conversation that we're going to have. Yes, focusing on benefits that employees really want and need is a trend, but it's also one that really needs to stay around and become a permanent part of the way we think about offering total rewards and a healthy workforce for everybody. Quickly before we begin, I want to give you a sense of maybe some of the financial health landscape in the United States, especially considering the effects of the pandemic over the last year. So according to Pew Research, about half of non-retired adults say the economic impact of COVID-19 will make it harder for them to achieve their long-term financial goals. Among those who say their financial situation has gotten worse during the pandemic, 44% think it will take them 3 or more years to get back to where they were a year prior. And 10% of that 44% don't think their finances will ever recover. But it's not all bad news, because employers are making a point to get involved in the financial health of their workforces. And I think that's a really important practice. They have so much opportunity to play a really important role in helping the country recover. So that's what we're going to talk about today. Before we get into our questions and our discussion, I want to have all of our panelists introduce themselves briefly. Tell us who you are, where you work, and what you do within your organization. So we'll start with Matt Watson at Origin.
Sounds good. Pleasure to be here with everyone today. My name is Matt Watson. I'm the founder and CEO at Origin, and we are a financial wellness company that works exclusively with employers to provide holistic financial planning services to their employees. One key thing that we love about our business is that we are sponsored by employers. So when we come to meet with an employee, whether they're using our software product or meeting with a certified financial planner, there's zero solicitation at all. It's a really safe place for an employee to come just to get that financial plan that generally is really difficult to go get on their own. And I think the big reason why we started the company was because we knew that money was such a big driver of stress for folks. 60% of adults say that money is the number one source of stress in their life, larger than job, health, and relationship stress combined. But unless you're an incredibly affluent individual, you can't get help. You can't get the advice. The traditional financial services industry is really tailored to really do one of two things. One is if you're incredibly affluent, they'll help you manage your money, create awesome financial plans. But if you don't meet that threshold, oftentimes you're being sold a product. And we wanted to create a really special place where people could come and just learn, figure out what they want to do for themselves, their family, and put financial plans into action.
Thanks, Matt. Ayanna.
Sure. Thanks for having me. My name is Ayanna Baldwin, and I am a director of benefits and human resources for Mercy Health, which is a healthcare system based out of St. Louis, Missouri. We have roughly 41,000 coworkers, and we serve patients across 4 different states: Missouri, Oklahoma, Arkansas, and Kansas. I'm also one of Mercy's 4 diversity officers. Thanks.
Thank you. Anna.
Hi, good afternoon, good morning. It's a pleasure to be here. I'm Anna Mendez. I am the Total Rewards VP for Latin America, and I work at MasterCard. MasterCard is a technology company in the global payment business, and we connect consumers with financial institutions, merchants, governments, and business worldwide. My role, as mentioned, is for Latin America, but I also support different global programs for MasterCard. Happy to be here.
Happy to have you. Bernie.
Good morning, good afternoon, good evening. I'm Bernie Knobbe. I'm responsible for global benefits and well-being here at AECOM. AECOM is a large firm that does design, engineering, construction, and project management for amazing projects around the world, focused on ESG and other environment, water, transportation, et cetera, areas. Some of our icon projects in the past are things like the SoFi Stadium here in LA, the One World Trade in New York, et cetera. So we're in about 100 countries. We have about 55,000 employees around the world. And I presented on a panel 2 years ago at a day one event. It was wonderful. So it's nice to be back. And I think I'm here today because we have a global well-being program that's been in place for 4 years now. And hopefully I can share a couple of aha moments before the end of the hour that will enable you to focus on well-being in your organization. So thanks for having me.
Okay. Who may be frozen, so we'll see if we can get him back here in a moment. Craig, are you with us?
I'm with you. Thanks
Okay.
for having me. I'm Craig Copeland. I'm a senior research associate at the Employee Benefit Research Institute. EBRI is a nonpartisan, nonprofit organization in Washington, D.C. that studies employee benefits. The one thing that I really work on that really has to do with today is, well, 2 things, is our surveys, the Retirement Confidence Survey, which looks at the attitudes and feelings that individuals have towards retirement and savings in general. Plus, we also do a survey on financial well-being, employer survey, where we look at the financial well-being or wellness benefits that employers offer. And we can provide some insight in what people are thinking about in providing these benefits today. Thank you.
Thanks, Craig. All right, well, let's jump in. So what I want to start talking about first is what are the most useful and urgent opportunities for employers to create equity in financial benefits today, specifically as it relates to current social, financial, economic climate. Let's start with Matt on this one, see what Origin's been working on here.
It's a good question. I think that's the root cause. The root reason why we started the company is to provide an equitable place for people to understand what they're working so hard to earn. So for 99% of employees, the employer is their sole driver of wealth creation, right? You're paying their paycheck, you're giving them a retirement account, health insurance, HSAs, FSAs, additional benefits. And so what we wanted to do, what we think is really important for employers to do, is to assist employees in understanding what they're receiving. So what are all the great things that I have coming in at the top of my kind of financial funnel, if you will, and really meeting employees there. So now you have an environment where you can give an employee a benefit where they can understand what they're earning, what they're receiving, and then how to make the most of that paycheck. And that's really, really impactful because people come from all different walks of life, all different socioeconomic backgrounds, different demographics, upbringings. And as that happens, there's really different levels of education, understanding, comfort, sophistication around money. Some people grow up and they're around it and they understand a lot of these things and they feel comfortable, plotting their own financial plan. But many folks who've maybe didn't come from as affluent a background have very little financial education. And so by offering this to folks, you're really giving them a gift of both educating them, but also helping them to understand and make the most of what they're earning. And this is something that's, qualitative in the sense that we know that there's different education levels, but then quantitative in that we know that, traditionally financial services companies have targeted different regions of the United States and charge different rates for simple things like loans or credit cards. And these things can be really predatory towards certain folks and certain groups of people. So by helping the employee understand their options, what they can do, how to start saving, paying down debt, you're creating much more opportunity for these individuals. And so, we've seen this trend, I think, for the past decade really start to pick up a little bit of steam, but it really feels like the last 3 years, employers in conjunction with, fertility benefits, mental health benefits, really the benefits around what help an individual be a more holistic person have picked up a lot of steam, and money management is a big part of that.
Craig, what about what EBRI is finding? I mean, your whole role is research, so I'd love to know what you think about the most urgent need right now.
Well, one of the most urgent programs, or most programs been receiving a lot of discussion, is emergency savings, because that really kind of gives us that basis that everyone can use, and they have access to money if something happens to them and they need some short-term money. They don't have to tap into the retirement plan, or they don't have to go on the credit card if they have this fund available. And there's many new ideas on how to provide this emergency savings, whether it's directly, funding it, helping people set up one, or maybe even doing cash advances or paycheck loans in a way that helps people get through these short-term bumps. That can really take care of and set that basis for everyone. The second thing we're finding is analogous to what Matt was talking about, something that's personalized, looking at everything in the person's finances, because everyone's finances typically are very different. So just by offering a retirement plan really isn't helpful to the person when they are struggling with debt. We really need to get them in a situation where that they're able to save for retirement by getting their current finances in order. And that involves some coaching, some personalized experiences where people really understand and listen to them. And also people that understand what maybe they're thinking about. I mean, one of the things we see sometimes is that Hispanic and Black Americans are more likely to think that they need to be supporting their family. So there's a little distinction between, well, it's not saving and spending now, it's also actually supporting other family members, and really thinking about how that comes into the discussion of getting your finances in order, of helping your family and preparing for your future at the same time.
Lots of you are at legacy companies who maybe at the very outset of the company creating a benefits package, equity was not necessarily top of mind. And as we grow and evolve and understand better ways to include and create parity across a global workforce, I know some of you all have made changes to existing rewards packages. So Anna, could you talk about some of the changes and programs that you guys have instituted at MasterCard to get a sense of how you guys are learning and changing?
Sure. Around 2018, after the US tax relief, companies started to think about like how to reinvest those earnings with the employees. And for us was very important to start retirement readiness for them. So we are in a journey and still to create that retirement readiness. And the primary focus is to be more inclusive and have our employees understanding how important and why the retirement is critical for us. So we set a global standard of 10% employer contribution in MasterCard sponsor plans and the defined contribution retirement plans, and implemented it 44 plans in countries where they didn't have any pension plan. It has been, as I said, a journey. It's not easy to implement pension plans everywhere around the world. And it has been evolved to a point that now in 2019, we decided that in 2020, we decided that we were ready to remove the waiting period. So employees now have the employer match ready and available for them since the first time that they start to contribute to the plan. And all this has been, of course, as my colleagues mentioned, supported by a strong financial well-being campaigns. In markets like Latin America, maybe in some markets like Asia, the culture of savings for retirement is not there. And little by little, we've been promoting and doing this financial well-being campaigns to teach them that even if you save 1%, 2% of your base salary, in the long term, that will help to be and will support your retirement readiness when the time comes. So that's something that we've been doing and will continue doing in MasterCard.
That's great. Ayanna, what about you at Mercy Hospital?
Sure, thanks for asking. So similar to what Craig said, a lot of the things that he mentioned resonated with me in that traditionally companies, we focused on retirement planning. And then, that retirement planning moved to, okay, well, maybe we need to think about loan forgiveness. But in actuality, we realized that everybody is just not in a position to think about either of those, frankly. And some people are just trying to simply make ends meet day to day. And so we took a different approach and last year created our Diversity, Equity, and Inclusion Governance Advisory Board. With that, we have 5 councils that report up to the advisory board. We appointed 4 diversity officers. And specifically as it relates to the financial wellness piece, one of the councils we title Social Determinants of Coworker Health. And that council's specific focus is having a bias for action to promote and establish programs that provide equity and dignity for all by allowing an equal playing field so that some that don't have, the chances that others have due to systematic and hidden barriers can thrive. And so within that particular council, we also have a financial wellness committee. And the financial wellness committee ensures and explores all options available to coworkers so that we can assist people along their financial journey every step of the way. We recommended and implemented programs to support guiding principles for just having a unique and dignified living wage philosophy. Healthcare equity, we focus on that so that we know that we can put into our coworkers healthcare that in turn, if they take a focus, that will also play a role not only into their health, but also their pockets as well. So we've established a governance approach to maintaining our financial wellness programs and implementing different things that we feel like can help every coworker, regardless of where they are in their journey.
I want to talk more about that, of this idea about meeting people specifically where they are. You talked about how not everyone is really in a position to contribute to a retirement plan, or lots of things that we think of as standard issue in benefits packages. So how are you meeting? You have a lot of employees at Mercy. Like, how are you meeting the needs of that range of financial positions?
Right, absolutely. It definitely can be difficult because, like I mentioned, we have over 41,000 coworkers. And so you have to really take a step back and understand that with that 41,000, that can be a diverse plethora of where people are. And so one thing that we do is we have an intranet portal online called Dollar Sense. And this portal is basically a one-stop shop where our coworkers can find tools and resources to help start saving if that's where you are, continue your saving if you're advanced, move forward in your financial retirement planning if that's where you are. Sometimes some people just need to establish a budget because guess what? They can't think about retirement, and frankly, they may not have enough take-home dollars to save. So establishing a budget might be a good start. So we've implemented that tool. We offer what's called healthy activity rewards, where we incentivize our coworkers to take different online training modules and do little scavenger hunts so that they can learn about these resources that we have. And when you get so many points, those get paid out to your payroll check. So far, we've had 7,400 coworkers participate in one of our modules that was just rolled out this quarter. So we get a lot of participation. From a 401k standpoint, we do auto enroll. So if someone doesn't take action when they're hired on as a new coworker, we automatically enroll you at 6% after 30 days. We're also going to pull the lever 1/1/2022 to establish the auto increase. So annually, it will increase by 1% your deductions and contributions. If you are in that program. We offer loan forgiveness to some of our nursing and physician staff, and we partner with a company called EdAssist. So the lender is paid directly versus the coworker as best practice. We offer SoFi benefits to help our coworkers just re-engage and understand that if their loans are, to make sure they have the best rates. We do a 50% upfront tuition reimbursement program for coworkers who earn less than $16 an hour. We offer tuition reimbursement on the front end versus the back end for that. We also have an earned wage access benefit where coworkers can access their earned wages before paycheck day. So sometimes, again, some people just need that money right away. And so we don't want to penalize people or encourage coworkers to go to payday loans or use credit cards. So we offer a benefit through an app on their cell phone where they can access their pay right away. And in the future, we have a few other things coming. So we're going to partner with Purchasing Power, which is an online portal that allows coworkers to make large item purchases and spread out that deduction from their paycheck over a period of time. Again, taking our coworkers for where they are, and maybe they're not those cash spenders. So encouraging them to use that type of benefit versus a payday loan or a credit card option. Just trying to offer a variety of benefits for people at every step of their financial journey so that we can satisfy the masses.
That is an incredibly comprehensive suite of options. I think that's so important. The auto enroll in the 401k, those automatic benefits that are offered. When I was 16 years old, one of my first jobs, there was an auto enroll 401k, and it just kept I just never stopped. And I don't know at what point I would have begun, and I started at 16, and I'm so glad that I did. So better late than never, but the auto enroll can make all the difference for someone. Matt, I know that you at Origin also place a lot of emphasis on meeting people at individual personal parts of their financial health journey.
Yeah, that's right. I just was listening, Ayanna, to that really comprehensive overview of all the things that you can do. And I think the takeaway that you articulated so nicely is that there's a lot of complexity to the problem, particularly across the different income levels that folks have. And so I think it sounds like you do a lot across the full spectrum, but the way that we very broadly think about this is that for folks who are, on the lower span of the income level, something like an earned wage access, which Craig talked about as well, I think is a really interesting product. Those are things that help employees stay out of payday loans. And when it's sponsored by the employer, can be an amazing thing for people to help smooth cash flows through, decreases in income or being furloughed or things of that nature. And then I think when you get into the group that is making a little bit more money, then you start to think a lot more about financial planning and making sure you're putting money into that retirement, putting money into the investment accounts, using the HSAs appropriately. And then when you get further past that into the executive suite, that seems to be where employers tend to kind of pull back a little bit and say, okay, the folks in the executive suite, have the access to services that are available to them. But just beautiful articulation of all the amazing things that you can do, and really highlighting that there's not a one size fits all approach to financial wellness, because there is so much specificity to folks from different parts of the country with different backgrounds and different income levels.
Another way to create some equity is to make these packages as flexible as possible, maybe even modular, so you get to pick and choose what you use. Obviously, when you have a really long list of options like Mercy Health does, it's going to be hard to use all of them. So you're going to have to come pick and choose. Anna, how do you allow people to build their own, if you will, financial health packages with MasterCard?
So as we know, the benefits landscape is constantly evolving, and we've been working to bring more customization and flexibility to benefits programs in the markets. The specific example that I'm gonna share is for Mexico. But previously in Mexico, our benefits were very competitive, but all employees had the same programs. There was no differentiation, and it was kind of the one size fits all approach, regardless of their individual needs. So a month ago, actually, we introduced what we call benefits choice. It's flex benefits. And with this simple, innovative and effective platform that allow our employees to choose the right benefits programs and the coverage level based on what is important to them in their current stage life, right? So together with this initiative, benefits choice will help us to, of course, attract, retain in our workforce, and will position us as an employer of choice in Mexico. The program is a result of a couple of years of hard work and several groups that work together, and it is possible due to the flexibility and regulations that we have in the market. And how it works is that we kept our existing benefits, but we're able to enhance their offerings. And based on different employees' feedback, we did focus groups and surveys and market data. We added 6 new providers, and in total, we offer 30 different alternatives for the employees. The cost is the same. So the cost for MasterCard is not increasing. And what we're providing now is employees have a pool of benefits, and they can choose what fits for them. As an example, I decided that I'm not going to use maternity coverage any longer, but instead of that, those points will go to me, and I want to offer a medical coverage for my parents. So that is the beauty of benefits choice, and it's something that as I mentioned, we implemented it a month ago. And the administration is done through a third-party vendor, but there's no cost or additional cost for MasterCard. Now, our employees, as I have 30 different plan options, and I will say the most popular benefits are medical coverage for parents, parents-in-law, medical checkups, and funeral expenses.
The ability to move your, I think you called them points, from maternity leave to coverage for your parents, that is such a powerful, impactful way to give employees exactly what they need. I think it's important not to make assumptions about the benefits that are necessary based purely on demographics, and making assumptions that, 60% of my workforce is under the age of 50, so we might want to think about maternity, but all these different things where lots of folks are in a sandwich generation. They're still taking care of, they're done having children, but they have children in the home, but they also have parents in the home. So the ability to move those opportunities where you need them would just be so. I think it would just make such a big difference in financial health. Let's talk about adapting your benefits based on current events, market influences. Obviously, a lot of things have changed over the last year, as we talked about at the top of the hour, that lots of people feel like they're not going to be able to recover, or that it's going to take them years to do so. Bernie, how are you at AECOM responding in time to what's going on? I know when we talked before that this is something that you guys are working on.
No, thank you. Well, a lot of great content so far. So a couple of points that I'll make. Number one is, unfortunately, when the COVID pandemic came about early last year, we were asked by the business, of course, to help our employees address the various issues that this was presenting for them. And because we had a global well-being program that was made up of 6 pillars, and financial well-being was one of those, we had a natural somewhat ability to expand on that and really raise awareness with our employees that we had a lot of tools and resources that were available to them through programs that already existed. But then we also made changes to those programs as necessary. So here in the US, for example, with all of the opportunities under the CARES Act, we implemented any provisions that were employee friendly to help enable employees to either get greater access to funds that maybe normally would not be available. Also making sure they understood the ramifications of that, because these are savings vehicles, et cetera, but also just realizing the immediate need was unique, and we had to make sure that we were helping them to address that. We also had a global EAP that we've had for a long time, but it gave us an opportunity to remind employees really worldwide, because we think and act globally as a company, in that, financial well-being drives emotional well-being, it drives physical well-being, and all the other aspects of that. And so helping people to achieve that is really important. So we have a long list of benefits. I won't go through them. Some have already offered a lot of great ideas today, and we have many of those as well. But we realize that choice helps us to deal with our diverse workforce, which is 4 generations now, but also realizing that around the world, it's a little different as to how that's accomplished. So we didn't feel like there's a one size fits all. We felt like we need to offer employees programs that are flexible and adaptable to them, and make sure they understand that they're available, and then let them pick and choose what's best for them and their families based on affordability, based on the needs that they have. So we didn't really think of it as financial wellness. We just thought of it as our global well-being program, of which financial is one aspect. But, people think of HSA accounts, for example, they think that's related to healthcare. Well, it is, but funding those healthcare expenses really has nothing to do with physical well-being. It's about financial well-being, and it's also about planning for the future. So now when we talk about anything we're doing, we always list the various pillars, because people think it's only one pillar, but it's probably 3 or 4, because physical well-being includes emotional, which includes financial, and we have one that's planet around, the environment, which is a big part of what our business is about. And so reminding employees that that's important too brings about well-being. So we've really thought about it holistically, I guess, versus just in one category. In benefits, we tend to categorize, we tend to put things in silos, and we've said, we have to stop doing that. We have to talk about it on a universal basis. So that's really worked well for us.
Gosh, I love an HSA, don't you? They're just so practical.
The only triple tax break left. So yeah,
I love it. I use mine every year. Let's talk about for the data guys in the room. Matt, Craig, you're doing a lot of research. Matt, you're working with other employers. When we spoke before, you talked about the importance of the identity of a financial planner or advisor, someone who's counseling an employee. What role does that identity and background have on the effect that they can have within somebody's life?
It's very significant for a number of reasons. I think the biggest thing with financial advice is that it's objective, right? And that the individual understands that it's objective, and they understand the context around why this is being recommended to them. And so with the financial planner, you can really get significantly deeper into the why for that specific individual. So an example might be, okay, the generic advice to the employees to max the 401k to take advantage of the match. Like, okay, in a lot of situations, that's good advice. But now let's say we have an individual with significant student loan debt, or maybe a significant other just lost their job. That generic advice is no longer applicable to this individual in a dynamic situation. And so we want a place where an employee can go when something happens. And most financial planning occurs around events. So you're starting a family, you're making a move, you're, a primary breadwinner in your family had a significant compensation change. These are the things when the generic advice doesn't do anybody any good, because we have so much complexity in our lives and what we really need. And so that's where we've seen a significant amount of engagement and value delivered to employees, is when the really complicated stuff comes in, the employer can say, hey, great, Emily, you can come talk to an Origin financial planner and they're going to help guide you through this. And the cool thing is, which we think is really important, it's kind of very similar to the medical industry, is that with a product like ours, you have continuity of care. So let's say I'm your financial planner. We've met, you've told me about your goals in life, what you're doing. All right, now 3 months down the road, something happens, and that kind of throws our pre-existing financial plan out the window, right? You come back and I already know your story. And now, we've built a relationship and I can help guide you through that. So what I guess what I'm getting at more specifically is, if you can help the employee really navigate their specific situation, there's significant increase in value to that individual. And the reason for that is understanding the why. And Anna touched on this a little bit, but if you can show the employee the long-term impact, and I think you said this as well, of contributing to a 401k when you're really young and you're really, have 30 or 40 years of work ahead of you, that can be a massive outcome that can really bring financial stability to that individual as they work through their career. Unfortunately, so many people don't understand these things and don't take advantage of them until they're a little bit further down the road. And that's really what we're trying to accomplish.
Craig, what kind of research do you have about the relationship between planner or advisor and client or advisee?
Well, some of the things that we found when we specifically asked people what they look for in their financial advisor, the most common one is that they have someone that works with their experience, their particular financial experiences, or where their finances are at. So if they're lower income or higher income, that's kind of the first thing. But also there's a secondary thing that we look at, that there's some connection to that person. Whether one strong one actually is their employer. Having it provided to their employer seems to give people an extra level of comfort, because there is that mechanism that is picking that person should be in their best interest, because the employers want to help out their employees. But then there's also that they would like to see someone that is their same identity, both similar identity, both the Black and Hispanic individuals that were asked said that, yeah, I would like to see an advisor that is of my race and ethnicity. That gives them extra level of comfort and experience of someone that knows what they're going through, has a better idea of who walked in their shoes, and seen what they have to make in their cultural differences in those decisions. Because, as I pointed out earlier, there's that strong cultural need or expectation to take care of the family. Well, that really makes it harder to, just max out your contributions. You really have to think about, how can I balance that expectation of taking care of my family versus trying to make sure that I don't get in a situation where I am expecting my family to take care of my retirement. I have done a good job that I can take care of myself.
Could you also talk about the program where you guys are investing in expanding the demographics of the financial planning industry? I think this is a really important thing. If you could highlight it quickly, I think this is a great practice.
Well, we are in a group, or we're part of a group that is led by one of financial institutions that is really promoting hiring of individuals from minority candidates. They're actively recruiting on historically Black colleges and universities to bring in the differences, so that they can really bring about advisors that it really will resonate with everyone. It's not just the same typical person, like me, that's in the financial advisory industry or predominantly, it's really getting that diverse group, and they're actively recruiting, looking at not just historically Black colleges, but in particular making emphasis there, but across all universities of really bringing in those type of individuals that allow people to see, wow, they're using these companies. These companies are really interested in me because they're actually hiring people like me. Therefore, I can be more likely to believe and use these people and develop it. And so we're getting to everyone, not just a certain group of people through these institutions. And we work with one particular one. We know that there are other financial institutions that are doing the same thing, but this is just the one that we've had this partnership with.
Thanks, that's great. I want to talk about how very few people make financial decisions totally alone. Not only do most people have to consider somebody else within their household, a parent, a child, another family member that they're caring for. If you're married, if you have a partner, you're likely making a financial decision in tandem with somebody else. Bernie, could you talk about how you all make these financial benefits available to family members as well? So just acknowledging that those decisions are not made in a vacuum.
Yeah, thank you. A couple of things that we've done is one, several years ago here in the US, and now in Canada as well, we offer our wellness program, but we actually include spouses or partners in that as well. So they have an opportunity to earn points, and then those points can be redeemed either for rewards or for reductions in healthcare contributions from the employee's paycheck. So we've really tried to bring the family in. A couple other things that we did to try to be a little creative is, number one, last year with our open enrollment mailing, we don't do much print and much mailing any longer. It's all electronic to both reduce expense and also meet people where they live, if you will. But we actually included all various well-being stickers in the mailing so that even like children that might be interested could start to learn the terminology about what are these various well-being pillars that we talk about and why is it physical versus emotional? What about the planet? So really trying to get even the children engaged. But when it comes to the spouse or partner, they're usually the individual that's sitting with the employee and making important decisions about their own financial well-being. So our newsletter has actually just a button at the top. You click on it, it pulls up an automated message. You can send that to your spouse or partner saying, hey, here's something the benefits group sent out. Thought we should discuss it later, or you might be interested. Another thing we did a couple of years ago is we actually used seeded paper and sent out a campaign around grow your finances over time, because it's not about retirement. It's about financial security in the future. If you talk retirement to certain age groups, certain cohorts, you may lose them. So we really tried to focus more just on saving for the future. So the paper was seeded, and the idea was it also played into the environment, which is our planet, well-being, et cetera, is you just plant it and it grows wildflowers. So first there was important information in it, then you could go plant it in your yard, and then eventually flowers would grow. And so it's like seeding your future retirement. So it's about coming up with clever ideas. And the last thing I'll mention is it's all about visuals, but everybody has stress balls on their desk or used to, but we're a company that builds and designs and project manages things. So we came up with actual stress blocks, and each one of them comes together and you can squeeze them and so forth. But there's a lot of stress associated with financial well-being. So we wanted to remind people that there's a way to reduce that. And so we've tried to come up with very hopefully creative and innovative and inexpensive ways to get the word out that it's financial well-being is a holistic thing, and you have to think about all aspects of it. So there's my pitch.
That's because you're having that budget conversation with your spouse. You've got that stress ball right there, ready to go. Craig, do you want to jump in on this one?
I'm sorry, no.
Oh, okay. Well, we're at 2:45, so I'm going to bring Steve back in for a moment, and then we'll get to Q&A from our audience.
Hey, Bernie, I haven't seen those stress blocks since the live event in Los Angeles, but they're memorable. Hey, thanks to all of you who are participating in For a Diverse Workforce. Are your financial benefits fair and equitable? And to our sponsor, Origin. Once again, in case you missed it at the beginning of this event, I'm going to share something special we have for today's attendees. One of our monthly virtual conferences is coming up on Wednesday, August 18th, and it's titled Learning from a Crisis about what working parents need. Thanks to today's sponsor, we're offering a complimentary VIP ticket to those of you participating today. They're normally $149, so this is a moment to grab one while you can. I placed the link in the chat space again. So thanks for checking that out. And at this time, we'll be taking some questions from our audience. Emily, back to you.
Thank you. Thank you. All right, let's see what folks are asking. We'll start with a question about emergency savings, which I think a lot of people have been thinking about over the last year. The question is, in addition to emergency savings and credit to help people through short-term bumps, are you seeing more companies offering emergency relief grants to help support employees in times of financial hardship and/or natural disaster? So the question is emergency savings versus emergency relief grants. And anybody can take this question for this one. I see Bernie and Craig look like they're going to jump in.
Well, just quickly, we don't have an emergency savings program, but we did implement a PTO donation program so that employees could donate hours, and then other employees that have a particular need, whether it's a national disaster or something maybe related to a medical expense that's creating hardship for them and their families, they can apply for that. We have a committee, I sit on that, and we review those requests on a periodic basis. So it gives people the well-being of knowing they're donating time that maybe they don't need for someone else who does. And then it creates financial well-being for the recipient who's receiving it. So it's a nice way to sort of have that 360 of creating the culture we're looking for, which is creating well-being, but also having an ED&I culture-related aspect to it, because everyone's needs are different at different times. So we don't think there's one solution. We think we need to have programs ready, so when people need it, we have something that helps to support them. So it's not emergency loans, but it has some of those aspects.
Great.
We have seen some of that in the direct grants and disaster relief, but however, there tends to be some question of taxability, so that makes it more complicated on providing that type of direct income benefit to an individual. And it's even kind of complicated with the employer funding an emergency savings fund, then that could potentially be a taxable event. So the people have to be careful of how they design these programs and really be careful of what is, what taxes that they could run into. If you're trying to give someone, $500,000, but then they got to turn around and pay taxes on it, it can complicate their life. So it's really kind of, yes, people are interested in it. Some people are actually doing it, but they have to be creative in how they do it.
The next question is, should employers have one-stop financial advisors, or how do you help workers navigate and understand these benefits? If anybody wants to take this one, Matt?
Yeah, I can hop in here and I'll give you a biased answer because this is what my company does. But yeah, I think it's really important. I think it's, I think even if it was outside of work, right, having a singular place where you can go to understand the complicated topics that are going to arise around your financial situation is very, very important for an individual. I think it's also good business practice for companies. We know that this is something that's really stressful for folks. And for everyone in question here, the 98% of employees, they can't get access to a financial advisor on their own without paying really, really predatory fees for that. And so this is really a gift that can be given to an employee to help them, really start planning for things that are not unusual. The folks that come into us, they're looking to start a family, buy a home, start saving for retirement, maybe help start saving for their kids' college education. These are really typical things that we should help employees manage and understand. And by giving them a personal financial planner or financial planning resource to do that, they're able to tackle these things. And we know that there's significant improvements to productivity, mental health, physical health, retention. So it's not only a really nice thing for the employee, but it's a good business practice, particularly in today's labor market.
The next question we have is really, Craig, did you want to jump in on that?
Yeah,
one?
I just want to add, we do see a lot of companies that are providing different vendors for different aspects. They may be providing one vendor for their insurance products and retirement products, but they'll have some underlying financial coach or advisor that understands the products available to their employees. So it's not like they're stuck with that, not stuck, but it's only that financial advisor. They still have that other individuals that they could be getting more advice from instead of just the one shop, the one person providing everything. They're knowledgeable about everything, but there may not necessarily be the provider of everything.
Yeah, and Craig, just to add to that, I think that there's like a critical component to this, which is, does the financial advisor have a vested interest in the employee doing one thing or another? And I think that that's something that's not discussed enough. I think there's some large financial institutions that provide financial advice in conjunction with a 401k or maybe, group life or group disability insurance. But those folks are often incentivized to increase the assets under management or, drive additional upsell on the insurance products. And so I agree with you. I think that, a company is going to have a 401k advisor and a group benefits provider. And then I think there's a third component, which is the kind of the objective fiduciary that can guide people across all of those things.
Our next question is very equity focused. Anonymous attendee writes, some might assume that low income workers are the ones who need extra consideration on this issue. I assume general financial health, but should employees engage diverse middle income workers as well? I have a feeling that everyone here is going to say yes, but Ayanna, since I know you specifically focus on meeting everyone, I'd love to hear your philosophy, your take on this. And if you have specific examples, that would be great.
Absolutely, I do. And I think that that's a great question. I absolutely think that companies should focus on the habit and not the income. And so one example is when I think about the earned wage access benefit that some of us talked about, our average hourly rate of coworkers that utilize that benefit is much higher than the threshold that we consider a lower paid coworker. And we even drilled down to specifics. I mean, there were director level, executive director levels that utilize that benefit. And so when we think about it, we want to address the behavior, because income doesn't always equal financial maturity. And so we think that it's important to ensure that all coworkers can access several benefits and that we base it off of the behavior and feedback and outcomes versus just that income level. Great question.
Good philosophy too. I like focus on the habit, not the paycheck, not the income. I think that's just a great philosophy for equity in general. It's, parity. We're gonna serve everybody. It doesn't matter the size of your paycheck. Anna, I saw you nodding your head at that question. Did you want to add anything to that?
Totally agree. No, it's just like it doesn't matter like the level of income. It's just creating the philosophy. Yeah, totally agree.
Great.
It's just.
Judy asks, is there a liability for employers who offer financial advice to their employees? I know none of you are attorneys here, but I'm sure some of you might have some knowledge about this. Whether employers are liable. Matt?
Yeah, it's a question that comes up. On our end, we assume the liability as it pertains to financial advice that's being given. And I'd also say that it's similar, risk or exposure that you would get when you advise on a 401k. So, if you're offering that investment vehicle to an individual, then, it's a similar type of exposure. I'd also say that when we're talking to employees about these things, these are not high risk strategies that are being offered to folks. We're not, recommending invest in single name stocks. It's generally very financial planning focused and goal oriented and creating a budget and paying off debt, which are almost exclusively one-way positive for employees. So, the liability on these items is quite muted when we look at, the risk of the employer. I think almost universally it's really safe recommendations that de-risk employees and put them in healthier financial positions.
Thanks. Now that we've talked about all these different things that employers can do, if a couple of you quickly could talk about how you determine which financial benefits you're going to use or add. Now that people on the call are thinking, okay, I might try that. Do you recommend people offer and then on the other side of that, determine whether there's adoption and usage, or do you recommend surveying to see what people want? I know some people don't like to raise hands, and so it feels easier just to say, here's a suite of materials that you can use. So would love to know how you guys are determining that. So as a good takeaway for folks listening to, Ayanna, I saw your microphone go off.
Sure, I'd love to answer that question. That's a great question. Our philosophy is definitely wanting feedback from our coworkers. We think that we don't want to big brother them, right? We don't want to assume we know what it is that you need. We want you to tell us what you need. And so we've gotten in the habit most recently of surveying every other month. It's called a climate survey, and we ask just 5 quick questions. The survey takes less than 5 minutes to answer, but it allows us the opportunity to gauge our culture, environment, and then also find out what benefits and comp feedback they have. And usually a lot of our new offerings come from not only feedback of what's in the market, because we're a hospital system, we have to be competitive and see what our competitors are doing and try to be a step ahead so that we can be the employer of choice. But we also very much value the feedback of our coworkers, and many of our benefits have been established because of feedback that we've been given.
I can speak on behalf of the companies that we work with. I think it's generally a survey that goes out and, really trying to understand what the need of the employee population is. And that's a way in many instances that companies and people teams are justifying the expense of the new benefit to, the financial controllers at the company, where they can say, look, we talked to our employees. We know that there's a need here. We've now got the data to support it. Let's go out and make an investment in both our time and our money to roll this out. But I say that as probably the least knowledgeable on the process here.
Yeah,
Emily, maybe I'll just make a quick comment. I know we're almost out of time. Is that we do pulse surveys as well, but they're not specific to benefits or to compensation. But we have all of our vendors and providers send out surveys when people have interacted with them, whether it's online or if they've called the call center, et cetera. So we do get some feedback. But I guess my advice, since you're asking for those sort of aha moments at the end, is it's about raising awareness. Often programs exist to meet the employees' needs. They just unfortunately either haven't been educated on it, they haven't paid attention, or maybe it just didn't apply to them when their life was different. But now they've had some change in their family situation or their financial situation. And there are ways that we can help people with what currently is in existence. You don't always need a new program. Sometimes you just need to inject life into one that exists today, because between new hires and just the constant change in the world, people lose track of and or sight of what already exists. So we try to utilize our outside vendors a lot to say, don't forget you have this global EAP. Don't forget you have these various financial benefits. So we use that portal, if you will, to send people in multiple directions to remind them there are other resources available. We just are always pleased when they ask, because usually we can respond and help them on that path or journey.
Thanks, Bernie. Before we wrap up, I want to hear from Anna on this one too.
Very quickly, we have business affinity groups and take advantage and have focus groups when we are trying to launch something and get their feedback. So it's a diverse groups that they have affinities, and they share with them what is the most important thing, and then from there we can start it, like think about programs that we really want to make an impact for the employees. So that's what we do. We use those business groups to get feedback.
Great. A lot of different ways to go about this. Thanks so much to our panelists. We're at 3 o'clock. So I'm going to turn it back over to Steve. I hope this has been helpful for everybody. So Steve, back to you.
You bet. Thanks, Emily, for your skillful moderation, and our wonderful speakers for your time and insights. It was a great conversation to have at a time when equity in pay, benefits, and other aspects of work is getting the attention it deserves these days. Thanks again to our sponsor, Origin, and to all of you for participating today. If you'd like to join us for more virtual events, you can head to our website, fromdayone.co, and check out more of our upcoming webinars. I'll mention a couple. On Thursday, August 5th, 4 ways data focused talent acquisition teams differ from others. On Thursday, August 12th, hiring for teams with the right combination of soft skills. And on Wednesday, as I've mentioned, August 18th, we'll be doing our monthly full-scale virtual conference focused on learning from a crisis about what working parents need. Visit our website at fromdayone.co to learn more. Thanks, everyone. Stay well.